G'day everyone, welcome to Buy, Hold, Sell, brought to you by Livewire Markets. My name's Matty Michael and Livewire have once again allowed money of mine to bring a bit of class into a resource spectacular for Buy, Hold, Sell. Today we're on to the wire, copper. And with me to go into everything Buy, Hold, Sell, copper, we've got Dave Franklyn from the Argonaut Natural Resources Fund and Sammy Berridge from Perennial. Lads, the copper story. Geez, it's been going since 4 or 5 years or so. This big, the bullish thematic around shortage of copper supply, declining grades in South America, but it just hasn't really come to fruition yet. We've sort of haven't really cracked over that $5 a pound mark. Dave, are you still hanging in there, mate?
We are. Look, we still believe in the copper story. I think it's probably worth just putting into some context. Copper's a big market. You know, it's 25 million tonnes per year, and really very entwined with global industry. And obviously, where the focus has been more recently has been on the whole EV thematic and perhaps supporting data centers and all that kind of stuff. But ultimately, it's big and diverse, and so it doesn't have the same level of volatility as some of the other commodities, which are smaller, like a lithium or a nickel or rare earths, which have been hammered over the last year. I think the big issue is a $4 dollar per pound copper price is actually pretty reasonable, and decent projects will make decent money at that kind of level. What you've seen in the last 2 years is slowing global economies, and that's had a dampening effect on demand and kept prices under control. But if you look at the next 5-10 years, copper demand is going to increase, and because of its size, it's very hard for supply to keep up. And so, dynamics look pretty good.
Sammy, the data centers have just added another layer of complexity when you're trying to model and predict what copper's going to do. And look, a lot of it around high interest rate environments, global growth, what China's doing. What are you seeing are the biggest sort of catalysts coming up for copper?
I think we've probably just started one of those catalysts now with the rate cuts recently in the US. The price has done reasonably well to bridge that gap, between sort of euphoric demand conditions post-COVID and then, weather that period of much higher rates from central banks as they try and, sort of stamp demand down as a means of combating inflation. But now we're getting through to the end of that, and lower rates will in time result in better demand, not just in Europe and the US, but through the emerging markets as well. And once that starts to happen, copper demand picking up, we will run into shortages. And because, as Dave pointed out, copper is a much bigger market than cobalt, than lithium, the supply response will take much, much longer. So it won't be a sort of an 18-month or 2-year thematic. It'll go for much longer than that.
The thing that everyone always says, there's hard to find pure play copper exposures on the ASX. Yourselves, do you have to really broaden yourself out to other markets to get pure play copper, or how do you sort of play it, Dave?
Yeah, I mean, it is a good point. There's a small number of copper producers in particular, and a smaller number that you really want to own. I think the benefit of having copper price perhaps coming off a bit is you get an opportunity to buy some of them at a good price. So we're seeing that. We do go offshore sometimes, and while we try and stay pure play, I think there are alternatives where you can go into an Evolution or perhaps even a BHP, which is one of the largest copper producers globally.
Sammy, you're firing up the Interactive Brokers account to get the overseas listed copper plays, mate?
Yeah, we certainly do from time to time, particularly when you want to, when you get quite bullish on the metal and you want to, expand that portfolio allocation to copper sort of, beyond 10, 15%. It's difficult to do that just in the ASX. So having that international, button to push is certainly helpful.
Very good. Right, let's get into the stocks. First one, you'd say one of the pure copper plays on the ASX, Sandfire Resources. Originally started with the Great DeGrussa project, which I had the pleasure of working at, but now since that unfortunately ran out of copper, they've got the Matsa project and the Mateo project in Spain and Botswana. How are we looking? And potentially the Black Butte in Montana, which has been around a while. So how are we looking? Dave, we'll start with you, mate. Sandfire Resources, buy, hold or sell?
So we've got a buy on Sandfire. Look, I think management's done a really good job in commissioning Mateo in Botswana and stabilising Matsa. I think what we're going to see now is it moving into a strong cash generating phase. We're expecting debt to reduce by about $250 million over the next year, which I think addresses one of the major issues there. Copper production will go from about 98,000 tonnes to 110,000 tonnes, and the EBITDA multiples just over 4 times for next year. So, we think it's good value at a low point in the cycle.
Sammy, what do you reckon, mate? They're having to work a bit harder for it these days. They're not getting 5% copper out of the ground like they did in the DeGrussa days. Sandfire Resources, buy, hold or sell?
I've got a sell on this one, just on relative valuation, but I'm also a little bit worried about the power prices in Spain from 2027. I mean, that is a little while away, but when they bought that asset, they got into a bit of strife there with those big price spikes and the resulting sort of charges from the smelters and along with operations from the higher power prices. And if Spain goes down and starts shutting down its nuclear industry, which it said it's going to from 2027, I don't see how they avoid walking the same path that Germany does. So it's a little bit of a tangent, but it's just something in the back of my mind that I'm a bit wary about.
Next one, Metals Acquisition Limited, MAC, previously known as MAC the SPAC. I guess, brought into Australia to acquire the CSA mine from Glencore out in Cobar, one of the highest grade underground copper mines around the world, but it is, 1,800 plus metres deep, very historical, but there's some good copper in there. MAC, buy, hold or sell? Dave?
Look, we've got a buy on MAC, Metals Acquisition. I think management's done a really good job since they bought the asset. They've increased resources and reserves. They've reduced costs, and now they're cranking up production. Should go from around 40,000 tonnes to 50,000 tonnes. Costs will come down. Free cash flow will start to improve. So we've got it as a buy.
Sammy, Metals Acquisition Limited out in the sunny Cobar, mate. Buy, hold or sell?
Yeah, we've got it on a buy, and you're dead right at being hot down there. I was down the shaft a few months ago, and the mine there, so you're medium rare if somebody forgets the air conditioning. But the staff there doing a fantastic job. They've put out a presentation recently suggesting a bit of upside surprise to guidance for this year. So I think near term news flow looks good.
Very good. Next one. Now, it's not a pure play, but it does have a decent amount of copper exposure now. Notoriously known as a gold stock, Evolution Mining, but they were getting the copper credit out of Ernest Henry, but we've recently seen them acquire North Parks, which is really lifting their copper exposure. So Evolution Mining, Dave, buy, hold or sell?
We've got a sell on Evolution as a copper exposure, and that's because it's a gold stock, right, with a bit of copper. So I think if copper moves and gold goes down, it's going to go down, right? So I don't think you buy Evolution for copper exposure. Production guidance is going to produce something like 740,000 ounces of gold and 75,000 tonnes of copper. So there's a mix. I think in general, well-managed business, good gold exposure, debt's falling, free cash flow's ramping up. Nice to have a bit of copper there, but it's a gold stock.
Sammy, Evolution, the gold and a bit of copper play, buy, hold, sell.
Yeah, I'll sit on the fence with a hold for this one. I mean, it is amusing we're talking about this as a copper stock, despite Jake trying to pitch it as it does continue to pitch it as a gold company and sort of adjusts his all-in sustaining costs to suit his purpose there. But yeah, I mean, it's a bit middle of the road, I think, in terms of valuation for us. So, we'll leave it on a hold.
Righto, what are you bringing to the table now for the copper plays outside of the three we've discussed? Dave, what do you got?
Yeah, look, we're heading back to Canada. So our buy is Teck Resources. Look, what it's done over the last year, it's sold off its coal assets. It's now got net cash of about $2.9 billion. But the story really is the diversified nature of its copper portfolio, which spreads across US, Canada, Chile, Peru, Mexico. Production's going from around 300,000 tonnes in 22 to about 600,000 tonnes by 25, with the QB mine in Chile, a big part of that ramp up. So we think it's a good, solid exposure to copper long term.
God, these Livewire listeners won't know what hit them with all these international stocks coming their way. Sammy, what have you got for us, mate? What are you buying?
Again, Canadian asset, but ASX listed, and that's Firefly Metals. Fantastic acquisition by Steve Parsons and the team there, and the drill results continue to grow that resource base into what looks like a 50,000 tonne per annum copper producer. So that's pretty much what Metals Acquisition Corp is doing, and they're capped at about $1 billion, whereas Firefly's just under half that. They've also got that Pickle Crow Gold project, which they're looking to divest, which should mean no more dilution or capital raisings if they can get that way at a reasonable price. And then just lastly, they put out some geophysical results just recently, and this it looks from that there are other lenses around which quite possibly add material upside to that mine life. So, you're not paying for that at the moment, which is what I like. But, that free option on, a substantially larger resource and therefore operation in time looks good.
Very good, gentlemen. Well, that's all we've got time for in this Copper Spectacular today. Thanks very much again to Livewire for having me on the show. And make sure you subscribe to all Livewire's content on YouTube, all the podcast platforms, and it'll keep feeding into your phone every single week. Take it easy, everyone. Cheers, lads.
Thank you.
Thanks. Cheers, Matty.